Assalamualaikum and good day everyone. My name is Muhammad Alif Daniel bin Abdul Razak. My metric number is 259109. I'm going to be the first presenter of my group. And before that, let me introduce my group member, which is the first one is Atira Fatini. The second one is me. The third one is Muhammad Taufik, and the last one is Muhammad Danish. The topic that we're going to present is about the understanding treasury instrument or product. The three instruments that we choose is first one Cagamas bond, second repurchase agreement, and the third one is BNM conventional bond. Let's go to the next slide. Okay, let's go to the first question, which is define what it is. Let's go to the first security, which is Cagamas bond. Cagamas bond is a Malaysian company that buy loan from financial institution on the domestic market. It is an unsecured barrier bond. Cagamas issue debt securities, and it is the second largest security issuer after the Malaysian government and the biggest asset-backed securities issuer in Malaysia. That's it for Cagamas, and let's go to the next, which is repurchase agreement. Repurchase agreement is money market instrument with short term. That means it less than 1 year. Repo is a party that sells security and agrees to buy them back in future at a higher price at later date. The transaction is sell and buyback agreement. The last one is BNM conventional bond. Bond have been defined by Jim Hymas as instrument for which there must be precise date on which interest and principal repayment flow to the investor, in default of which an operating company is put into bankruptcy. The BNM conventional bond is referred to as nominal bond. Okay, purpose of its creation. First with Cagamas bond. The Cagamas bond provide mortgage financial with liquidity. Next, cover through the PWR program promoting origination tenor house funding to last up 35 years. Next is provide easily accessible house financing. So Cagamas bond is for the house financing. Next is repurchase agreement. The purpose of its creation because of the very high tax at the time as a result of the military uprising. Next, to make it more effective. And the last one, this financial instrument has grown widely around the world because nowadays everybody use repurchase agreement. And the last one is BNM conventional bond. Why this bond is great? The government and corporation commonly use the bond in order to borrow money. The government need to fund road, school, dams, or other infrastructure. That's why they use BNM conventional bond. Okay, let's go to the next question, which is how it is created. First is Cagamas Bond Malaysia. Cagamas bond business in Malaysia started in October 1987 with the purchase of loan and debt by through its secondary debt securities. The debt securities, however, were not backed by cash flow from loan and debt. This process was adapted to the domestic environment as financial entities and the capital market were not ready for security. And the second is repo agreement BNM, which is when a company need cash immediately but does not want to sell their long-term security. Therefore, they can enter into repurchase agreement, which is repo. This agreement is also common between a large bank and other large financial institution. However, this repo also happen at a small business level. A dealer sell government security to investor, basically on an overnight basis, and buy them back the following day at a slightly overpriced. This agreement was created from repurchase agreement, where to sell security as collateral. Next is BNM Commissioner Bond. It is stipulated in the Central Bank Act 1988 that Bank Negara Malaysia can provide temporary advance known as way and mean to the government cover any deficit in budget revenue. However, there are legal limitations to the amount and the duration of the loan that Bank Negara can make available to the government. As a result, the central bank holding of MGS is minimal. Since 2005, Bank Negara Malaysia is allowed to purchase MGS from the primary and secondary market based on market price and to use the purchase security for its open market operation. Thank you. Next is who are the parties involved. In Cagamas Bond Malaysia Conventional, the party involved is company Cagamas or Cagamas, an investor. Next, repurchase agreement, seller and buyer. For BNM conventional bond, there are three parties, which is the first issuer, second trustee, and the last one is investor. That is the parties that involved in these three security. That was for me. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. To our lecturer, Sir Syaril. First of all, my name is Muhammad Taufiq bin Zulkifli, number matri 259138. Okay, I will continue right of the each party. In Cagamas Bond Malaysia, Cagamas Company Issuer, authorizer of all step term and condition to be taken fully in the order to allow the issuer to legally enter into exercise the company right and fulfill the obligation under the warranty agreement which included in the provision of any requirement concerned. Second, investor. Investor right are able to make educated decision in order to assess the risk level and assess return to invest. For the repurchase agreement, right on coupon, dividend or others income on a security bill used as a collateral. First, the buyer hold legal title to collateral. In other words, the collateral is his property and he is entitled to any benefit of ownership. This means they should receive any coupon, dividend or other income that may be paid by the issuer of the collateral. The seller of collateral retain the risk on the collateral as has committed to buy its back at a fixed price in the future. So if the price fall between selling and buying, the seller will suffer the loss and vice versa. The seller will not accept the risk on the collateral unless he also receives the return including coupon, dividend or others income. Next, for voting right and corporate action, the buyer hold legal title to the collateral. In other words, the collateral is his property and he is entitled to any benefit of ownership. The seller cannot detect that what decision the buyer made on the collateral sold to the buyer at the start of the report. Assume the buyer is the holding that collateral when a decision has to be made. The next, the seller has to contractual right to be specific the form of the forgivable collateral to be sold back to him at the end of the report. Next, BNM conversion bond. Issuer have right to issue the instrument up to the limit if credit is allowed to fund the operation and usually comprised of government which has the bond is funding a country operation that can be spent on a new project. Trustee has the power of administration for managing daily related to bond between the issue and investor. Investor, he has the right to get periodic payment, collar coupon payment as the promise in the contract agreed upon by the issuer and have the right to get the face value of the maturity debt. The next responsibility obligation of each party. First, Cagamas bond. Cagamas bond company user provide risk management for credit and portfolio, facilitate strategy for resources management. Number 3, conduct the reduction of systematic financial risk. Number 4, conduct best practice and define guidelines to create financial standard that comply. Number 5, lead management role is the Cagamas applied financial institution to invite investor to side up of the new primary market issue. For the investor, the responsibility for investor are advanced before subscription, purchase and acceptance of bond to consult with their financial, legal and others relevant qualified consultant. Next, for the repurchase agreement, seller and buyer duties can be stated as the follow. Must be honest. Before entering into the agreement, seller and buyer signing an agreement. This agreement must state that everything is the truth. Is that is no element of the fraud. Everything is honest, transparent and trustworthy. For example, seller sell security, not is a property. That's going to be another one side problem. So they need to have a sense responsibility. Number 2, must comply with guideline. Malaysia must be followed. Bank Negara Malaysia BNM is one of the guide. Number 3, must be careful overcoming risk in life. This is because if someone declare bankrupt, then the business partner will be affected too. Number 3, BNM conventional bond. Issuer a bond issue is the one of the sell bond to investor or lender to raise money in the short or long term. The issue bring together a finance term responsibility for underwriting and selling the bond. Trustee, bond trustee is responsible for the registration, transfer and payment of bond. Number 2 is required maintain separate account, monitor bond document requirement and provide monthly statement. It's also a proof amendment to some document and acts on behalf of the bondholder if the borrower of issue violate certain bond document. Which risk of each party. For the Cagamas company issue, market risk is the loss of the market interest rate as a result of a shift in the level of volatility. Second, credit risk refer to the possible uncertainty in the sale arising from the inability to satisfy the financial obligation of the consumer of equivalent. Number 3, liquidity risk arises when the Cagamas company may not have sufficient fund in place to meet its obligation. For the investor, inflation risk is the dangers of inflation rising, the purchase power of the protection bond voucher and the principal. For the repurchase agreement, buyer credit risk. If the seller or counterparty to the trade goes bankrupt before the repo mature, then the buyer will be left holding the security underlying the reported buyer market risk. If the counterparty to the deal goes bankrupt before maturity, then the repo buyer is exposed to the market risk caused by the changes in the interest rate. Number 3, seller credit risk. If the company goes bankrupt before the trade mature, then the security that's we loan to the buyer might get stuck in the bankruptcy proceeding and not returned to the seller. Seller market risk. If the buyer goes bankrupt, then the seller has no amount of cash that will be lower than the value of the security that were loaned at the start of the trade. For the BNM conventional bond, risk for the bondholder. Inflation risk is the measure of the price increase throughout an economy. If price rise by 3% and the bond pay a 2% coupon, the bondholder has a net loss in the real term. In other words, bondholder have an inflation risk. Bondholder carry credit risk and default risk, since that are tied to the issue of the financial viability. If a company struggle, financial investor are at a risk default on the bond. In other words, the whole bondholder might lose 100% of the principal investor. For the issuer, interest rate risk, credit risk, liquidity risk, inflation risk can apple the issue the bond anytime. For the last, return benefit to each party. For the Cagamas company user to increase size of the issue, that mean the minimum size prerequisite to incorporate the Cagamas bond into the powerful. For the investor benefit is from the higher return than other similarly ranking and maturity financial instrument. The availability and the credibility of the party to the transaction of high quality security are dependent on the underlying asset quality. A creative system with theoretical deliver greater return with greater risk tolerance. Local currency index rise to weight of the Cagamas bond in the index. For the repurchase agreement, for the buyer, if the borrower seller default to repay, the lender buyer can sell the security to others. Is the secure funding for the lender. Upon maturity, the seller will purchase the security at the higher price than the previous one. Therefore, a buyer benefit from the extra money generated by the purchase at the beginning and the transaction. For the seller, sell security because want to get the money immediately, can get money quickly and easily to fund one business. If anything what happen for case emergency, the seller will receive a paid coupon over the lifetime of the report. He still has right ownership over the security because at maturity we will repurchase. And lastly, BNM conventional bond. For the bondholder, interest payment is the semi-annual. Coupon rate is the market determined based on the weighted average successfully of the issue. The reward available to bondholder include a relative safe investment product. They receive regular interest payment and return of their investor principal on maturity issue. For the issue, benefit for giving out bond to investors are able to manipulate the money of the to user in the to get profit. That's all for me. Thank you.
Assalamualaikum and hello, my name is Muhammad Danish Vedas Jung, check number 259317. So I'm going to explain about the pricing mechanism. Cagamas bond Malaysia conventional. The calculation of pricing mechanism, if the company which is based on the Cagamas rate is based on the appropriate rate of return for the determination of Cagamas installment. Cagamas rate depend on the bond yield and market condition of Cagamas as following. So if they proceed, price will divide by 100 times face value times rate plus time divided by 365 days. So for repurchase agreement, BNM Malaysia, the repurchase price would be calculated based on the initial cash, pay interest on what you borrowed. The value of the collateral is its current market value, including any accrued interest, coupon, etc. A seller would be receiving any coupon paid during the life of the repo. This means that let's say 1 million nominated of bond, 1.05% are placed, then party A receive 1.05 million in exchange for the bond. The term repo fee is 30 days with repo rate of 6%. Then party A will then pay 1.05 million times 1 plus 6% times 30 divided by 316. So the total amount that he will get is 1,055,250 to party B to get the security back. For BNM commercial bond do not trade like stock. The pricing mechanism that cause change in the bond market are not nearly as intuitive as seeing a stock or mutual fund rise in the value. The three primary influence of bond pricing on the open market are supplies and demand. So term to maturity and credit quality. Bonds that are priced lower have higher yields. For example, the standard trading amount is 5 million and it's actively traded in secondary market. So how does this instrument traded? So for Cagamas bond Malaysia, it's initially assess the viability of the securitization exercise and take into account the willingness of the originator to provide historical details and to provide securitized lending. And the rating agency and the arrange must perform cash flow analysis and deal structuring to assess the credit risk as well as the type of debt instrument to be issued compliance with the investor needs. So this means that the bond must be in A or AA or triple A. So the investor will feel safe when they invest in the Cagamas bond. So for repurchase agreement, you can see in the flow. So first, the investor place in money market fund. For this is for repo investment date. So you can see the investor First, he will give the cash balance set to the condition to security agents, and then the security agent will release cash to dealer. So when the investment have gone to maturity date, so the dealer sent the digital security to the custodian. So it mean that repo dealer will send to security agent, and then from there they will give the money back to the investor. For conventional BNM, it traded on year basis discount rate based on the band of remaining tenure. For example, band 4 equal to 68 to 90 days to maturity. So the standard trading amount is 5 million, and it actively traded in secondary market. If company needs a fund, they will issue bond to investors. So this means that if the company needed money, they will issue a bond. So investor will try to get their bond so they can generate money. So to borrow, issue bond that include the term of the loan, the interest payment that will be made, and the time at which the principal of the bond is to be repaid at maturity date. And interest payment is part of the return that bondholder earn for lending their fund to the issuer. This means that the bondholder will have interest as a profit for them for lending their money. So, is there any secondary market for each of the money market? So, for Cagamas bond Malaysia, yes, there is a secondary market for Cagamas bond for investor to purchase. This secondary market bond for existing Cagamas bond. Repurchase agreement also have secondary market. Its role into ensuring liquidity in secondary debt market. So this means that the repurchase agreement is equitable. I think it's a second class liquidity in secondary debt market. And BNM conventional bond, Bank Negara Malaysia conventional bond also have actively traded in secondary market. So that's all for me. Thank you.
Assalamualaikum, my name is Atira Fadini binti Muhammad Baha, my metric number 259010. I will continue with the presentation. So the next question is where and how you can access to this instrument. So the BNM bond you can access at the Bank Negara Malaysia bond through unit trust investment, creation of the brokerage account, and an agent who will facilitate the purchase and sale of financial security. For the Cagamas bond, you can access at Commercial Bank, Malaysia Building Society Berhad, Development Financial Institution. So for the repurchase agreement, you can access through repurchase agreement, set off the revised repurchase site and forecast of the bank, involving ringgit and non-ringgit repo and reverse repo transaction, max tenure to 5 years from 365 days based on principle-based risk management approach in controlling of the report product. So the next question is how does the instrument used in the bank treasury operation? For the BNM bond, bank issue fixed rate coupon bearing or floating rate BNM conventional bond and help to deepen the secondary market liquidity of the short-term bill market. For the Cagamas bond, the Treasury Bank will administer the Treasury Management Policy (TMP), which provide for the management of the exposure of the company to various treasury risks. For the repurchase agreement, banks sell eligible securities such as MGS, Malaysian government security, to the bank, and at the same time, as part of the same operation, commit to repurchase the equivalent security on the specified date at the specified price. So bank will buy eligible security from bank and at the same time, as a part of the same operation, commit to resell the equivalent security on the specified date and the specified price which reflect the repo rates. So the next question is are there any official guideline regulating this instrument? For the BNM bond, discounted or coupon bearing basis, the maximum maturity from 1 to 3 years, the overnight policy rate remain the primary predictor of monetary policy stance, conducted through competitive auction via the principal dealer network, tradable on yield basis based on the band of remaining tenor, and the standard trading amount is 5 million ringgit. So for the Cagamas bond, the guideline regulating to the instrument is a banking asset count for the capital, and you can see risk weight of 20% and the liquidity status of class 2. So the qualifiable category 2 level is raised to 50% as a part of the liquidity process. Like other credit exposure, insurance company asset now has a credit facility and tend to be granted the status of the accepted acquisition, and primary issuance of the Cagamas debt security would have the effect of the market-driven security. So for the repurchase agreement, capital adequacy framework based on Basel II risk-weight asset, single counterparty exposure limit, foreign exchange administration rule or code of conduct for Malaysia wholesale, Malaysia market, net stable funding ratio, and STAT smart reporting requirement on data submission for reporting entities. So the last question is, who are the regulating agency? So for the BNM bond, the regulating agency is Security Commission Malaysia. For the Cagamas bond, they have 3 regulating agency, which is the Security Commission Malaysia, Bank Negara Malaysia, and Bursa Malaysia. For the last one is a repurchase agreement. There are 3 also regulating agency, which is from Security Commission Malaysia, BNM, Bank Negara Malaysia, and the last one Rentas. That's all from our group. Thank you.